Abby, okay, China and India, how important are they to the global economy? Does growth in China and India mean that the world will become a better place?
Obviously, we spend a great deal of time looking at these two very important economies, the most populous nations on the planet, and so on. And I think that while there are, of course, many differences, there are also some similarities. Some of the reforms that have been discussed by PM Modi impress us as being very important, particularly those that relate to proper and more efficient functioning of the government and the economy itself. One of the enormous advantages that India has is, of course, the relative youthfulness of the workforce. What we see as important needs for India would be bigger investments in things like infrastructure, but most importantly in people, improving the literacy rate, for example. When we turn our attention to China, still obviously a very important nation from a GDP standpoint, the world's second largest economy. It's about half the size of the U.S., maybe 40% the size of the U.S., but obviously it has been growing rapidly. That growth has now decelerated, and we think part of this is related to the policy intention by the relatively new government of Mr. Xi to address some of the long-term structural issues. What they'll be looking to do in the coming years is to reduce corruption in that economy, also to pay more attention to environmental sustainability. It has to do not just with the air quality, but also the water quality, which has become an increasingly significant concern in China. And then specifically with regard to the economy, we see focus on that government to delever the economy. And typically when the banking system is delevered and you try to squeeze out extra debt from the housing sector, for example, that does not typically go along with very rapid economic growth. So the bottom line is that we think that these two economies remain very important. The growth rates going forward may not be what they were previously. What's very important is that the governments focus in on sustainable economic growth, and we think in both countries that is indeed the policy emphasis right now.
Abby, but aren't you worried, as some other strategists are, about China's property and banking sector? Some have even suggested that they're in a bubble and they could melt down and, in effect, derail growth in the world. Would that worry you too?
We have our team based in Asia that looks at all of these questions in significant detail. And our analysts became concerned about that issue 3 years ago. And at that point, we were forecasting a slowdown in Chinese growth. And we also advised our global investors to be very careful with Chinese equities. As we take a look at the current situation, the fact that the government is taking significant steps and is talking about them openly is actually good news. Sometimes a problem is a bigger threat when it is buried, and clearly this is a problem which is no longer beneath the surface. It's something that is being discussed. To move to the second part of your question, what would the impact be on the economy outside China? Keep in mind that, particularly with regard to the U.S. relationship, China is primarily an exporter to us. They are not a significant market for U.S. goods and services. So a slowdown in Chinese economic growth would not have much impact at all on the United States. The impact, we think, would be more significant within Asia, where there's a lot of intra-regional trade, as opposed to trade between China and the U.S. per se.
Abby, what are the themes that investors will be betting on in 2015? In the U.S. or markets or globally?
I think that one theme always has to be where is the fundamental sunlight? Which economies are growing? Which corporations are performing well? Certainly the U.S. looks very good in that regard, as do a handful of multinational companies in other regions, point one. Point two, we always look at the fundamentals of valuation. How are stocks priced? As I mentioned before, while U.S. shares have already gone up, notably in price, we think that as long as there's not a recession on the horizon, U.S. share prices can continue to rise. I will note, of course, that in some other markets, PE ratios are lower than they are in the United States. However, profit margins and returns on equity are higher in the U.S., which we think help justify those higher PE ratios. So when I look at overall themes for investment, we're looking at where will the economic growth be, number one. Number two, where is reasonable valuation? And number three, how are balance sheets being used? One very important change that we think is likely has to do with how cash on the balance sheet is being deployed. Early in the recovery here in the United States, the best performing stocks were those of companies that had a lot of cash and returned that cash to shareholders in the form of dividends or share repurchases. Looking forward, we think that there'll be more or buybacks, right? Think of a share buyback as a tax-preferred way of issuing a dividend. It basically works out the same way from a corporate finance standpoint. Looking forward, though, I think it will be those companies that use their cash to grow. Use the money to invest in CapEx, use the money to do R&D, research and development, and also those companies which are growing on the top line and hiring workers. We think that, if you will, there'll be a shift from balance sheet use in terms of cash return to shareholder directly, and then the shift is into using the cash to actually grow. This is good not just for the shareholder, obviously, but it's so important for the economy overall and also for employment. One of the big changes that we've seen in the U.S. in recent months has been that our labor markets look much healthier than they did even 6 to 12 months ago. And what we'll be watching very carefully is whether this continues. If it does, that typically means yet another leg to an equity bull market. The sectors that we're looking at right now include some of, the sectors that we're looking at right now are the ones where we do see economic growth. There are some selected areas in technology, including some of the older technology companies. We're also looking at some of the industrial companies, machinery companies, for example, some things related to aerospace. But we're also looking to some things related to consumer discretionary spending. Not consumer staple spending, but discretionary spending. We see that consumer confidence in the United States has been rising. We see that consumers are feeling better about keeping their jobs. They're feeling somewhat better about their incomes in the future. And typically that means they'll spend the money on discretionary items. Maybe that has meant autos in the past. It could mean vacation spending or spending out at restaurants and things of that sort going forward, spending on services for consumers.
Okay, Abby. But for you, what would the signs be that the bull market, now 6 years old, would be topping out?
The most important thing for us has to do, again, with that fundamental basket of information. And so, for example, if we see that economic growth is faltering, that would be a very significant issue for us. If we thought that inflation was becoming problematic, and problematic so that the Fed would be raising interest rates dramatically, that would also be a problem. That does not seem to us, however, to be likely this year, next year, or at this point, even in 2016. We also, of course, look at some of those other factors that are so hard for us to quantify. You asked about some of them before, including the political backdrop. That is something that has hurt the economy. Previously, during gridlock, you may, of course, recall when the government had to shut down because the Republicans would not agree to the president's budget. We don't see that happening, but it's hard for us to forecast these sorts of items. But these are things that would worry us.
Among Brazil, Russia, India, and China, the so-called BRIC countries, where are you the most positive about?
The answer really comes from the work from my colleagues who are based in these different regions. And I would say that right now, India and China look most appealing to us. Obviously, there are a number of significant issues affecting Russia, one of those being the price of energy. One of the most important economic goods, if you will, economic exports for Russia is energy, and that price is down very substantially. Brazil, we think, is looking better than it has. We need, of course, to watch the political and policy developments in there in the coming months.
Abby, you ever had a chance to visit India?
I have been to India, and I had an opportunity to meet with Goldman Sachs clients there and also some corporate leaders. It was quite an interesting experience for me.
Would you liken Mr. Modi to Ronald Reagan's presidency in America, an agent for change? Would you share some of the optimism about India that was visible in the U.S. under Reagan?
Clearly, there's great enthusiasm from Mr. Modi, not just in India, but also elsewhere. As you may be aware, there's a very large Indian community here in the United States, including in my home city, New York, where there was great excitement when the Prime Minister came at the time of the UN meetings and spoke to many large groups. And what he had to say was very well received here. Number one, the focus on reforms in the economy and in the government bureaucracy. Secondly, the role of the diaspora of people of Indian background and the role that they could play in growth in the nation. And I think one of the comments that he made, not looking for charity but looking for investment, is something that was very well received here in the United States during his recent visit. I did take a look, for example, when he took office at his 10 leading reform principles, 6 of which had to do with reform. And I thought that was quite interesting.
Abby, thank you so much for your very good insights.
Thank you.
My guest today on RD360, Goldman Sachs' legendary market strategist, Abby Joseph Cohen. See you next week.